What's going on, guys? My name is Richard and welcome back to another weekly watchlist video. Overall, there's 17 stocks on my radar for this upcoming trading week, and for each of them we'll go through the fundamentals in Marketsmith and also head over to TC2000, talk about the technicals and entry setup that I would use for each of these stocks. And if you enjoy my analysis, please go ahead and leave a like down below and subscribe if you are new to the channel. But getting into the video, we'll start with Band or Bandwidth Inc., and they provide cloud-based software-powered communications platforms for businesses. And taking a look at the earnings, you can see last quarter it was very strong, up 133%. Sales were up 29%. And for 2020, you can see they're barely supposed to be profitable, but there's supposed to be a big jump in 2021, up 900%, with the revisions being up as well. The EPS rating is a 64, the Group RS is an A+, the SMR rating is a D, accumulation distribution is an A+, and the overall composite rating is a strong 97. And taking a look at the fund ownership, a nice increasing trend from 63 to 297 in 2 years. That's very, very good. And you've got two high quality funds investing into this company. And taking a look at the technicals, you can see that they had a huge run up on big volume. There's a nice spike here. And you can see that they've now been consolidating. It's going very tight as the Bollinger Bands are constricting right here. And you actually had a Bollinger Band bounce last Friday. And this stock is actionable based on that setup in early next week. So I want to see an increase on volume, potentially a green dot as well on Monday. And if it follows through on volume, I will take up a position in this stock. So that's Band, and moving on, we've got Bill.com. So starting with its earnings, you can see it's actually not profitable at this moment, but taking a look at the sales growth, you can see nice steady growth up around 50% for the past 4 quarters. And you can see from 2020 and 2021, that's not supposed to be profitable anytime soon. So the overall EPS rating is a 3, the Group RS is an A-, the SMR rating is a D, accumulation distribution is a B, the overall composite rating is a pretty poor 69. And taking a look at the fund ownership, you've got a pretty steady amount of funds, 189 to 196, but you've got 4 high quality funds investing into this company. And they also do cloud-based stuff. They provide cloud-based software that simplifies and automates back office financial operations for small businesses. So heading over to TC2000, let's talk about the setup that I would use for this stock. So they had pretty good relative strength coming out of this correction, moved up sharply, and then after this big run up, you can see that it drifted downwards, hit the lower Bollinger Band, and has since had a Bollinger Band bounce and a green dot entry on Friday. And you might be asking why this huge down volume doesn't bother me on last Tuesday and Wednesday. And I think the answer for that is that it wasn't down substantially. It was down 3.3% and only 0.19% on Wednesday. And this is actually kind of stabilizing. It's kind of showing a support area here because it kind of hit a floor and bounced back up. So I view this actually as a positive, an indication that institutions are supporting this stock. So that's Bill.com, and basically it's actionable early next week on either of these two setups right here. So that's Bill, and moving on, we've got Beyond Meat, which I've talked about before. Really strong earnings growth last quarter, up 130%. Sales growth was up 141%, and after-tax margins were up as well. And for 2020, you can see that it's supposed to be just barely profitable, and for 2021, you're supposed to see a 273% increase in that EPS. The overall EPS rating is a 69, the Group RS is a B+, the SMR rating is a C, the accumulation distribution is an A-, and the overall composite rating is an 89. And taking a look at the fund ownership, nice increasing trend, but you only have one high quality fund investing in this company, and it's not a huge position. So taking a look now at the technicals, we'll talk about the setup that I would use for this stock. So overall, it's right out of this consolidation period right here, and it's kind of pulled back to the breakout zone. And you can see it had a pretty bad Wednesday where it dipped down and then reversed nicely back above the lower Bollinger Band. And then it kind of stayed there until Friday where it had a lower Bollinger Band bounce. So to me, this is a nice low risk entry. You could set your stop right at the Bollinger Band and either get out with a small loss or get a nice entry into this stock. So that's Beyond Meat, and moving on, we've got Chegg, which was actually the subject of my most recent stock of the week. So if you would like a little bit more info about this company, I'll have a link in the description, and also appearing above right now. But overall, really strong earnings and sales growth the past few quarters, up 47% last quarter, sales were up 35%, and after-tax margins were up as well. And you can see for 2020 and 2021, the increases are very strong and revisions are up as well. The overall EPS rating is a very strong 99. The group RS is an A, SMR rating is an A, accumulation distribution is a B+, and the overall composite rating is a 99. Taking a look at the fund ownership, nice increasing trend, and you've got 5 high quality funds investing into this company. So going over to the technicals, you can see that it had a huge power up after its earnings report and has since pretty much gone sideways. And it's been trading very tight, as you can see from these Bollinger Bands right here. So once again, this presents a nice risk reward ratio where you can set your stop right below this Bollinger Band and know quickly if you were wrong, but otherwise get a nice entry into a high flying growth stock. So I'm looking to use either a green dot stochastic cross or a break above this pivot right here that was set on 5/15 at 67.98. So that's how I'm approaching Chegg. And next up on the list, we've got DDOG. And overall, you can see nice strong earnings growth the past few quarters, up 400% last quarter, sales were up 87%, and after-tax margins were up 14.3%. And taking a look at the annual EPS numbers, you can see that for 2020, it's supposed to be barely profitable, and you're not supposed to get a huge increase in 2021 either. But overall, the EPS rating is a 76, the group RS is an A+, the SMR rating is a C, accumulation distribution is an A-, and the overall composite rating is a very strong 98. And taking a look at its fund ownership, you see kind of a steady trend. It's kind of just holding there in the 220s, but you've got 3 high quality funds investing into this company. And taking a look at the technicals, it also had a nice gap up on that strong earnings report and has since gone sideways like Chegg. So I'm planning to use either a green dot stochastic cross, and for those of you who don't know, a green dot is basically a 10-4-4 stochastic cross where this red line increases above the signal line, which is a simple moving average of the 10-4 stochastic. So I plan to use a green dot entry or a cross above this pivot set at 75 for my entry. So that is DDOG, and next up we've got a familiar name. We've got Dexcom, and taking a look at the earnings growth, this is exactly what you want to see from a potential true market leader. And overall, you can see last quarter up 980%, sales were up 44%, and after-tax margins were up as well. For 2020, the estimates are up 14%, and for 2021, up a further 42%, and the revisions are up as well. The EPS rating is a 76, the group RS is an A+, the SMR rating is an A, accumulation distribution a B+, and the overall composite rating is a 99. And if you want to know more about this company, I also did a stock of the week video about this one, which I will link above right now. But overall, taking a look at the fund ownership, again, this is a prime example of what I hope to see, a nice increasing trend, almost doubling over the past 2 years. And you can see a whole bunch of high quality funds investing in this company. And when you see a list like this, that tells you that you really need to pay attention to this company. They've got a bright future ahead of them. And now taking a look at the technicals, we'll talk about entry setups. So overall, it had a nice reversal, as many stocks did on this Wednesday, and has since kind of held steady right here and actually had a green dot and blue dot on the same exact day. So I plan to enter based on either of those setups early next week if it advances on volume. So that's Dexcom, and overall, you've got a nice breakout of a cup and handle right here, which I initially bought back here, and since then a 50% run up, which is now consolidating. So I think Dexcom is definitely one to add to your watch list. Next up, we've got EMPH, which is involved with solar energy, and you can see really strong earnings and sales growth the past few quarters, up 375% last quarter, sales were up 105%, and after-tax margins were up 25.2%. You can see for 2020, the estimates are up 2%, and for 2021, up a further 41%. The EPS rating is a 76, the group RS is an A+, the SMR rating is an A, accumulation distribution is a B, and the overall composite rating is a very strong 98. Taking a look at the fund ownership, a nice increasing trend, but you only have one high quality fund investing into this company. So taking a look at the technicals, you can see once again, it had a nice run up after this consolidation, and right now has a drop back down. And you can see the Bollinger Bands are tightening up, showing that volatility is decreasing, which is exactly when we want to be buying these type of stocks. And you can see it's very close to a green dot setup. So that is the entry setup that I plan to use for this company. And if you would like a little bit more info about my entry setup specifically, I have made a video completely going through all 5 that I use on a regular basis, and I'll link that above right now. Moving on to the next stock on the list, we've got Etsy Inc., which provides an e-commerce platform that allows people to buy and sell handmade goods. And overall, you can see that the earnings growth is actually negative right now, but you've got very solid sales growth right here and decent after-tax margins. And for 2020, you can see that the estimates are up 20%, for 2021 up a further 41%, and overall the EPS rating is a 13, the Group RS is an A+, the SMR rating is a B, accumulation distribution is a B, and the overall composite rating is a pretty good 88. And taking a look at the fund ownership, you can see that over the past 2 years, it has increased, although it had its peak in June 2019, and you've got 3 high-quality funds investing into this company. So taking a look at the technicals, let's talk about the entry point that I would use. So you can see that it's advanced nicely from this consolidation and has dropped down recently over the past few weeks. It had a nice Bollinger Band bounce and also a green dot on last Wednesday. So overall, I would buy it if it acts well early next week or it advances through this pivot at 88.02. So moving on, we've got FSLY, which is another cloud-based company. And overall, you can see it's not profitable yet, but there is that steady sales growth right here. And you can see looking at the estimates that it's not supposed to be profitable within the next 2 years. Overall, the EPS rating is a 22, the Group RS is an A+, the SMR rating is a D, the accumulation distribution is a B+, and the overall composite rating is an 87. And taking a look at the fund ownership, you can see it's been pretty steady over the past year or so, and you've got no high-quality funds investing into this company. And taking a look at the technicals, we can talk about why I like it. And basically the reason that I like this company is because of this huge gap up on earnings, which really has the signs of institutional accumulation. And since then, the stock has really drifted higher as demand has been incredibly strong, and it's now consolidating briefly. The Bollinger Bands are tightening, and it looks ready for a green dot entry right here or a break above this pivot, which it's set at 45.53. So that's FSLY. And moving on, we've got Fiverr. And this is an Israel-based company that is basically an e-commerce platform for services. And overall, you can see it's not profitable yet, but once again, you have steady revenue growth right here, up 44% last quarter. And you can see for 2020 and 2021, it's not yet supposed to be profitable. And the EPS rating is a 46, the Group RS is an A+, the SMR rating is a D, accumulation distribution is an A+, and the overall composite rating is a 96. And taking a look at the fund ownership, you can see it's been growing a little bit, but really there's not many funds investing into this company, and you've only got one high quality fund investing into Fiverr. Taking a look at the technicals, you can see it's actually a high tight flag candidate because it's increased more than 100% in a very short amount of time and now has a brief consolidation, and I would either use a stochastic cross or a break above this pivot at 66.74 as my entry. And you can see the huge volume coming in on this past Friday, which really shows that institutions are jumping into this stock. Next on the list, we've got LVGO, which is another previous stock of the week. And overall, you can see really strong earnings growth the past few quarters, up 133% last quarter. Sales were up 115%, and after-tax margins were up as well. You can see for 2020, it's not supposed to be profitable, but it is supposed to be profitable in 2021. Overall, the EPS rating is a 76, the Group RS is an A, the SMR rating is a C, the accumulation distribution is an A+, and the overall composite rating is a 98. And taking a look at the fund ownership, a nice increasing trend, but you only have one high-quality fund investing into this company. And taking a look at the technicals, you can see it had a nice run-up as well, just like Fiverr, and since then has had a Bollinger Band bounce on last Thursday and a green dot on Friday. So this is actionable next week, and I would buy it if it starts increasing on above average volume, especially if it breaks out above this previous high at 63.55. So next up on the list, we've got a repeat from last week, NBIX. And overall, as I pointed out last week, very strong earnings and sales growth the past few quarters. as well as annual estimates for 2020 and 2021. The EPS rating is a 77. The group RS is an A+. The SMR rating is an A. Accumulation distribution is a B-, and the overall composite rating is a 98. And taking a look at its fund ownership, nice increasing trend, and you have 3 high-quality funds investing into NBIX. And taking a look at the technicals, this is a potential green line breakout, which it's set at 126.98. So I would buy it if it closes above this on above average volume. Next up, we've got Cloudflare or Nets, and you can see it's not yet profitable, but it does have very strong sales growth. And you can see it's also not supposed to be profitable for the next 2 years. The EPS rating is a 21. The group RS is an A+. The SMR rating is a D. Accumulation distribution is a B+, and the overall composite rating is an 85. And taking a look at the fund ownership, nice increasing trend, and you have 3 high quality funds taking up ownership of this company. And moving over to the technicals, you can see that it broke out above its green line recently, and now it has kind of consolidated a little bit. The Bollinger Bands have gone very tight, and it had a green dot on this past Friday. So I would either buy it if it increased on above average volume early next week, or if it broke out above this previous high at 30.78. Next up, we've got another repeat in Tesla, which has had very strong earnings growth and has very good estimates for 2020 and 2021. You can see the EPS rating is a 65, the group RS is an A+, SMR rating is a C, accumulation distribution is a B-, and the overall composite rating is a 96. And taking a look at the fund ownership, a nice increasing trend, and 4 high quality funds investing into Tesla. And taking a look at the technicals, you can see it's been very, very tight below this 869 pivot. So I would either use a Bollinger Band bounce or a breakthrough of this pivot. And after it breaks through this, it's likely that there will be another huge short squeeze. So stay on the lookout for that. And next up, we've got TTD. And this is another repeat from last week. Nice earnings and sales growth the past few quarters. For 2020, the estimates are down, but for 2021, they're supposed to pick right back up. The EPS rating is a 99. The group RS is a B. The SMR rating is an A. Accumulation distribution is a B+, and the overall composite rating is a very strong 98. Taking a look at the fund ownership, a nice increasing trend. And as with Dexcom, this is exactly what you want to see. A lot of high quality funds investing into this company. Moving over to the technicals, you can see that it consolidated nicely and has now formed a consolidation very tight right below this pivot at 327.35. So you could buy it as it breaks through this on above average volume, or try to look for an earlier entry using this Bollinger Band bounce as your setup. So next up, we've got Vertex, another repeat from a previous week. Overall, this is a very strong stock, excellent fundamentals, up 125%. In terms of earnings last quarter, sales were up 76%, and after-tax margins were up 44.5%. And for 2020, the estimates are up 65%, and for 2021, up a further 24%. And the EPS rating is a 99, the group RS is an A+, the SMR rating is an A, accumulation distribution is a B, and the overall composite rating is a very strong 99. And taking a look at the fund ownership, a nice increasing trend, and you've got 4 high quality funds investing into this company. And taking a look at the technicals, you can see a huge shakeout right here, and actually did get stopped out on this day, but I'm looking to get back in if it advances nicely early next week and hopefully breaks above this pivot at 295.55. So there's a very strong stock with excellent fundamentals and a pretty decent setup. And moving on to our last stock, we've got Wingstop, and overall you don't see explosive earnings or sales growth yet, but the estimates for 2020 are up 41%, and for 2021 up a further 19%. The EPS rating is an A6, the group RS is an A-, the SMR rating is not available, accumulation distribution is a B-, and the composite rating is a pretty strong 89. And taking a look at the fund ownership, you can see an increasing trend and 6 high quality funds investing into this company. And taking a look at the technicals, you can see that it advanced nicely after this consolidation and actually had a recent green line breakout and now the first green dot after that green line. And this is a setup that I really like to use, and I actually plan to backtest that using Python, and I'll share the results with you guys. But overall, a nice setup. I would either use the green dot early next week or a break above this pivot at 130.99. So that is pretty much my watch list for this upcoming trading week. Make sure that if you enjoyed my analysis that you leave a like down below and subscribe if you're new to the channel. But let me know down below what your top 3 picks are. And for me, it's probably Dexcom, LVGO, and Vertex. But that's it for me. Thanks so much for watching, and I'll see you guys in future videos.